Welcome to Top Real Estate Questions with Maison Moving Company. Today's top real estate question is financing options for real estate. 2-to-1 temporary buydown. This involves a temporary reduction in the interest rate for the first 2 years, followed by a regular interest rate for the remaining loan term. 5-to-3-to-1 graduated payment mortgage. The interest rate decreases in increments over the first 3 years before stabilizing for the remainder of the loan term. 4-to-3-to-2-to-1 step rate mortgage. This type of mortgage has a series of step rate increases or decreases over the initial years, providing gradual adjustments before settling on a fixed rate. 7-to-5 balloon mortgage. The borrower pays a lower interest rate for the first 7 years, followed by a higher fixed rate for the remaining 5 years. At the end of the term, a balloon payment is due. 10-to-1 interest-only ARM. For the initial 10 years, the borrower pays only interest, after which the loan transitions to a traditional principal and interest payment structure. 5-to-5-to-5 adjustable rate mortgage ARM. The interest rate remains fixed for the first 5 years, adjusts in the next 5 years, and then adjusts again every 5 years thereafter. 2-to-step mortgage. This mortgage offers 2 different fixed interest rates over the loan term, often with a higher initial rate for a specified period followed by a lower stable rate. Reverse mortgage, a type of mortgage where homeowners receive payments from the lender instead of making monthly payments. This is often used by seniors to convert home equity into income. Biweekly mortgage. Instead of making monthly payments, borrowers make half of their monthly mortgage payment every 2 weeks, resulting in an extra payment each year and an accelerated loan payoff. Interest-only mortgage. Borrowers pay only the interest for a specified initial period, after which they must start paying both principal and interest. Assumable mortgage. A mortgage that can be transferred to a new buyer, allowing them to take over the existing mortgage terms. No closing cost mortgage. The lender covers the closing costs, but the borrower might face a higher interest rate or a slightly increased loan amount. Hybrid ARM 3-1, 5-1, 7-1. The interest rate is fixed for a certain number of years, 3, 5, or 7, and then adjusts annually based on market conditions. Buydown mortgage. Besides 3-to-2-to-1, other buydown options include 2-to-1 and 1-to-0, where the interest rate is reduced in the initial years. Shared appreciation mortgage, SAM. The lender shares in the appreciation of the property value over time. This could involve a percentage of the sales price or a share in the profits. Equity Accelerated Program. Equity Accelerator Program. A program where borrowers make additional payments to reduce the principal faster, resulting in earlier loan payoff and interest savings. Construction 2 Permanent Loan. A loan that covers the cost of both building a new home and converting it to a permanent mortgage once construction is complete. Blanket mortgage. A single mortgage covering multiple properties, often used by real estate developers or investors. Assessment lien mortgage. The loan is repaid through property tax assessments rather than traditional mortgage payments. Fixed rate mortgage, FRM. A traditional mortgage with a constant interest rate and monthly payments that do not change over the life of the loan. Interest first mortgage. Borrowers pay only interest for a specified initial period before transitioning to principal and interest payments. Wraparound mortgage. A secondary mortgage that wraps around an existing first mortgage. The borrower makes payments to the seller, who continues to make payments on the original mortgage. Piggyback Loan, 80-10-10 or 80-15-5. Combines a first mortgage, 80% of the home's value, with a second mortgage, 10% or 15%, often used to avoid private mortgage insurance, PMI. Option ARM, adjustable rate mortgage. Allows borrowers to choose from different payment options each month, including minimum payments, interest-only payments, or fully amortizing payments. Graduated payment mortgage, GPM. Monthly payments start lower and gradually increase over time, typically with the expectation that the borrower's income will rise. Portable mortgage. Allows borrowers to transfer their existing mortgage to a new property when they move. Alt-A mortgage. A type of mortgage that falls between prime and subprime, often offering more flexible qualification criteria. Assumption mortgage. Permits a buyer to take over the existing mortgage of a seller. Balloon mortgage, a short-term mortgage with a small monthly payments and a large balloon payment at the end of the loan term. Convertible ARM, an adjustable rate mortgage that allows the borrower to convert to a fixed rate mortgage under certain conditions. Joint venture JV financing, a partnership arrangement where two or more parties jointly finance a real estate project, sharing both the risks and rewards. Seller financing, the seller acts as the lender, financing the purchase for the buyer. The buyer makes payments directly to the seller instead of a traditional lender. Seasoned mortgage, a mortgage that has a payment history and has been in existence for some time, often considered less risky by investors. Interest-Subsidy Buydown, a temporary reduction in the interest rate, with the subsidy decreasing over time until the borrower assumes the full interest payment. Equity sharing, an arrangement where two parties, typically an investor and a homeowner, share ownership and appreciation in a property. Green mortgage, incentivizes energy-efficient home improvements by offering favorable terms for properties with green features. No documentation loan, mortgage where minimal financial documentation is required from the borrower, often associated with higher interest rates. Graduated payment loan, GPL. Similar to GPM, this type of loan has payments and start lower and increase at predetermined intervals. Shared equity mortgage, a mortgage in which the lender shares in the appreciation or depreciation of the property. Bridge loan, short-term financing that helps bridge the gap between the purchase of a new home and the sale of the current one. Hard money loan, a short-term, high-interest loan secured by the value of the property, often used by real estate investors for quick financing. Assessed value, the value assigned to a property by a tax assessor for the purpose of calculating property taxes. Debt service coverage ratio, DSCR, a financial metric used by lenders to assess a borrower's ability to cover debt payments, often applied to commercial real estate. Cap rate, capitalization rate, measure used to evaluate the potential return on an investment property, calculated by dividing the property's net operating income by its current market value. Leasehold mortgage, financing secured by a leasehold interest in a property rather than by ownership of the property itself. Quiet title action, legal action taken to establish clear ownership of a property, often necessary when there are disputes or questions about the title. Participation mortgage, a mortgage in which the lender participates in the income generated by the mortgaged property beyond just receiving interest and principal payments. HUD-1 settlement statement, a standard form used in real estate transactions that provides an itemized list of charges and credits related to the closing of a property sale. Thank you for tuning in to Maison Moving Company, where we've tackled your top real estate questions. If I've provided the answers you were looking for, don't forget to hit that subscribe button and give it a thumbs up or a like. Realtors, let's connect on Instagram, LinkedIn, or YouTube, or drop me an email at maisonmovingcompany@gmail.com for the LinkedIn connection. To all our viewers, have an incredible day or night. Until next time, this is Mason signing off. Bye. If you're as excited about diving deeper into real estate trends and tips, we have something special for you. Simply hit pause, open your email, and send us a quick message with the subject line magazine. Once you've sent that off, we'll make sure to send you a downloadable link to our exclusive magazine, Maison Moving Company, Real Estate Trends and Tips. It's packed with even more in-depth content, stunning visuals, and expert advice. Remember, this is your key to unlocking the door to real estate success. So go ahead, send that email, and let's continue this journey together. Thanks again for being with us. Stay tuned for more exciting content, and until next time, happy reading and exploring.